What's up, people? April 14th, 2026. The markets really do feel just like they did April 14th, 2025. Lockout rally. I find lockout rally one of the harder conditions for me to trade psychologically. And the reason for that is I'm a risk adverse trader, so it's really hard to manage risk in a logical way in a lockout rally. Regardless, but I just go over a few charts and share. I typically post my trading ideas every day, and I'll just share a little bit about how I trade my trading ideas as well. So we'll just start by taking a look at SPY here. As you can see, we got several gaps below us. We're just in a V-shaped recovery, and we are almost to all-time highs. So if you were going to trade SPY, how exactly would you trade this? And let me find a drawing tool. Um, basically, what I'd be looking for tomorrow is the continuation to the all-time high. So higher low over yesterday, high a day, to all-time high, or even the overnight all-time high, 699. Then we'll reassess when we get there. May we have like a tiny little support area around 693.25. We could pull back and hold there as well. So those are the two things I'd be looking for. I can't think of any situation other than we open with a gap up, take a look over the overnight high, fail that. That's the only situation I might consider buying puts or taking any shorts on this. Let's head on over to QQQ. QQQ also several gaps below us, not quite as close to the all-time high. Looks a little bit easier to trade than SPY will be. And that's just because we're just breaking over this resistance at close today. So if tomorrow we can get a higher low above the 628.50 and semiconductors and tech continue to look hot, then that was a really bad higher low. But then I would just be looking probably for all-time highs, but my first target would be 663.60. And I always have these arrows drawn on my charts, and the way I trade them is I always enter on the higher low. So I'll be entering right here. What does that look like for me? It usually looks like some break above and pull back and then a hammer candle, something like that. And at the same time, I'm watching up in my top left here, I have a score. You can get that indicator at tao-trading.com. And it just scores the market. So if it's double digits in green, most likely looking continuing to go long. If it's near zero, more neutral conditions. And if it's red and double digit negative, then we're probably looking to go short. So that's a great indicator that helps. I also have these indicators on the website. They cover New York Stock Exchange, NASDAQ, Russell, and S&P, and all they are is showing the volume ratio. So as you can see at close today, we had 3 times more buyers than sellers on the NASDAQ, 2.3 on Russell, 1.6 on the S&P 500. And while we're talking about volume, something I've noticed with this lockout rally, really, it's happening on really low volume. And I haven't looked yet, but I want to say that last year in April when we had a similar lockout rally, I kind of vaguely remember it was also on low volume. And it was also during a tariff crisis, just like we're now in this energy war crisis. And if you remember, what happened was we went straight to all-time highs, then broke over all-time highs. And all the leaders went up 100%, 200%. So, who are the leaders right now? When you think about that, they're Amazon, Broadcom, Micron, um, you know, possibly Google, AMD. So, uh, these are the charts we need to be thinking about for having the potential to do that. What charts aren't doing so hot? Well, that were once leaders. Tesla is one. Microsoft has been one, but I'm seeing some signs there might be a turnaround in Microsoft. Robinhood was a leader before. I'm seeing some potential signs of turnaround there too. So we're going to be looking at Microsoft and Robinhood closely today as potential charts that will make a turnaround. I hope, because if so, there's some great trading opportunities in the immediate future. So we'll go over what we'll be looking for to see if that is in fact potentially going to happen. All right, so let's take a look at the Dow Jones DIA. I like Dow Jones right now. We just gapped up, had a little flag, broke out of that flag today. Have a tiny little, well, is that a little, okay. I want to say there's a tiny little gap above us, but I don't think there actually is. I'm just saying that because of this yellow line. But here's what's cool about the Dow right now. We got this clear resistance at 484.30. We have broken above it. So now we're looking for any higher lows above 484.30 to target 487.60. So that could be a higher low over the high of day today or a pullback and hold of 484.30. And we'll also take a look at the Russell IWM. We clearly have some resistance right here at 269.10. So looking for any higher lows over 269.10 to target the all-time high. All right, now that we got those four out of the way, let's take a look at, we'll start with NVIDIA. NVIDIA's really got some potential right now. Stuck in this consolidation forever. Clearly today we broke and closed above that 193.25. So pullbacks that hold 193.25 are good to go long on. And pullbacks at 194. Let's switch to the hourly so you can see this. Pullbacks that hold 194.80 are good. The best trade would be a pullback to 193.25 and then go long. But we're in a lockout rally. So in a lockout rally, I will adjust the rules and say that higher lows over yesterday, high a day are good to go in a lockout rally. So that would be fine. And a pullback here would be fine. And a pullback to 194.80 would be fine. And my target is 202.40 essentially. We do have this at 198.75. That was the high of the third quarter's earnings. So that could come into play as a significant area. We had blowout earnings on NVIDIA when that high came in, and we didn't go higher, but we also weren't in a lockout rally at the time. So conditions are definitely different now. Let's take a look at Microsoft. Go back to the daily here. All right. So Microsoft has not been so much of a leader in this lockout rally, right? We were stuck for almost a week, maybe longer, under 373.50. But yesterday we broke above this 382.25, which kind of made me start watching Microsoft. As you can see, I was looking today for a higher low above 383, 385.15. Clearly, we've got that. And then I was just waiting to see where we're going to get a higher low above the 20 SMA today. It failed to get a higher low above that about 3 times today and then just barely closed above it. So for tomorrow, the only way I'm looking to trade this long, pretty much no other path that I see is just a higher low above today's high a day. Probably sell some at 400 and then really target this 405.50. And will this be the start of a recovery in Microsoft? Hopefully, quite possibly could be. So if we get that higher low above 395 tomorrow and the market's internals are green and volume green and all that stuff, it could turn out good there. So I really want to start watching Microsoft as something that could potentially start recovering. We're not quite there yet, but I think we're right on the cusp of that potential. AVGO, Broadcom. All right, AVGO, obviously been in a lockout rally. Gapped up a couple days ago, broke above this very critical 353.25, which is this prior bounce range. Technically, any higher lows above 353.25, even if we came back and closed this gap low, are good for continuation to the long side. Now, we do have this gap above us on Broadcom. I don't know if this is going to close tomorrow, but what I do like is we have this nice long green bar right here, right? And then today we held to the upper 50% of that and didn't really go anywhere. So we have 1 day of consolidation. That gives me enough to have confidence that if we get a higher low into this gap, I'm going to go ahead and try and attempt a long to close the gap. Typically what we'll see though is probably another day of consolidation. And if that does happen, it'll only give me more confidence in the trade when it does occur. So this is definitely on the top of my watch list for tomorrow. Let's say we have a pullback day tomorrow. Who should we be looking at? Well, I would look at Palantir, none other than Palantir. And the reason being, we're in the downtrend, got the bear flag. We did break below this bounce and then give a hammer candle. Now we've had a 2-day recovery. The ideal spot for a lower high would be 136.45. And we got an inverted hammer closed below that level today. So that's a perfect setup to go short if and only if we're having a folded back day in the broad market tomorrow. Market internals are red. Then I'd be looking for a lower high below 134.15. First target being 129.18 and then eventual target being 126.75. So requirements for this trade for me are we're having a red day tomorrow, we have red internals, and then we have a lower high below the 134.15. That's where I attempt the trade. All right. Now let's take a look at Robinhood. There's a lot of good things to say about the Robinhood chart, while there's also some bad things to say about it. Let me go to the weekly. What's good? Okay, we have this parabolic run on Robinhood. Now we've had this massive correction. Where did the correction stop? It stopped at the prior high over here. Perfect place for a higher low on the weekly chart. We got a little hammer candle. Now we have some movement above that. So now let's go over to the daily. Today, we gapped up on Robinhood. Great sign of bullishness. We gap and go'd and closed right at the top of this bounce range. So that could only mean one thing. If lockout rally continues tomorrow, market internals are green, and we get a clean higher low above this 79.25, count me in to go long. Could be the beginning of a recovery in Robinhood. I mean, there's a big old theory that Robinhood's going to have this transfer of wealth as time goes on. I believe in the theory. And not only that, we got the perfect spot for a higher low on the weekly chart. This could turn in to the beginning of a recovery. I might consider taking swings if this starts tomorrow. Doesn't mean it has to work, but that would be, if it was going to work, that would be what the start of it would look like. So I'm paying close attention to Robinhood tomorrow to see if we can get that higher low and going from there. Next, let's take a look at ARM. Definitely been a bullish chart as of late. Kind of had this consolidation over here. But if we look over at the hourly, you can really see here that we have this clear level at 162. We're now riding right near the top of that. This gives us a very risk adverse setup. That is the reason I like it, because it's a clear level. We got lots of consolidation below. We haven't already broken above, and now we're trying to get in after the move. It's risk adverse. I like that. So I am looking for, once again, lockout rallies continuing. Semiconductor, all that stuff are still in the lockout rally. I'm looking for higher low above. Target one for me, 171.57. Target two, 178.60. Something like that. If it all plays out. Now, the way I trade when I'm trading is I'm usually on the 2-minute chart, and I'm usually watching a ton of charts. But what I'm really looking for when this happens, right? What I'm really looking for is a move up, pulls back, and I got like a little hammer candle that just kind of lands perfectly like this. And then the next candle breaks above, and my market internals are all green. So I'm going to enter there. And my stop's usually going to be down here or below VWAP over here. Not a huge stop. And as soon as I get to 1-to-1 risk reward, like right here, I'm typically selling half my positions right there. And what that does for me is it puts me in a spot where I'm in a risk-free trade. So even if the trade works out some of the way and doesn't work out all the way, I'm still making money on the trade. That's what works for me. It works for my psychology. I thought I'd just share that. Let's take a look at the Google chart. Go back to the daily, not the 4-hour, the daily. All right. Google's been a beautiful chart ever since we gapped up, pulled back to the top of the gap, and gave a hammer candle. Getting in at the top of that hammer candle's been good. Had a little drawdown, whatever. We got this previous resistance now, which should turn out to be support at 327. Ideal trade would be like pull back to right here, then a move up, then a higher low above 333.20. Target 343.25. I would also be willing to accept a pullback to close this gap and a double bottom or something like that, and come back up and target equal highs. That'd be cool too. So Google, clean chart. I like it. Looks like it's probably heading to all-time highs like most everything else that we've looked at. Not everything, but many things. Let's take a look at Meta. All right, so when it comes to Meta, I got to be honest, I was looking for a short prior to today. And that's because we have this clear overhead supply right here at 653.20, basically. And then for 2 days here, the first day we rejected it, and we rejected this 50 SMA right here. Second day, rejected it again. Third day, while we did have a hammer candle close, we didn't really, I guess we closed over this simple moving average right there, but we didn't really close over the overhead supply. Well, this morning we opened gapped up. I was kind of watching it to see if it was going to go above the gap, fail, and then come back down. That never happened. Instead, we got a strong green close on the day, showing signs that Meta failed to give us the lower high like it should have in the trend count. So that tells us Meta is having changing character after today. So pullbacks to 659, buyers step up, target up here, 678.50. I'd also be willing higher lows above 665.25, target 678.50. Final chart for today, AMD. AMD is one hell of a beast. Clearly, ever since we broke above 218.85, this thing's been in play. Technically, any pullbacks that hold above 218.85 are bullish and good for longs. In the immediate future and the lockout rallies continuing, then I'd just look for a higher low above yesterday high today. If that's not how it works out and we have some pullbacks, this is fine. This is fine. Gap fill reversal is fine. I mean, this is fine. This is actually the ideal trade right here. Right. So anything like that's fine, but base case is probably just the higher low above yesterday high day as long as market internals are green and lockout rally continues. Uh, that is it. Please like, please subscribe. I'm so small, I'm celebrating every subscriber.